Hey, big news. This month, we launched the Ecommerce Finance Podcast. If you're an e-commerce seller trying to scale your business profitably, then this is for you. This past month, we covered 2025 trends affecting e-commerce businesses, broke down budgeting and forecasting, mapped out the 4 phases of e-commerce accounting, explored the TikTok shop opportunity, and dived deep into the Shopify Plus changes with AvaTax and sales tax complexities. Did you miss an episode? No problem. Here are some of the best moments. Let's dive in.
I think that's the true beauty of TikTok. Or working with influencers previously was like this pedestal peasant scenario. Brands would go beg these influencers, like, please, can I have the opportunity to work with you, please? And these creators would like deign to make you a video or two for $2,500 or something like that. And then you were left with, did it do something?
Yeah.
How do I measure any value in this? TikTok has flipped the script. So it is an even playing field between brands and creators. And it turned it into a joint venture relationship where creators can see their affiliates. They get commission from selling products. And if they perform well, they earn more. So it creates this natural drive in them to find brands to work with and to work hard for them, and vice versa.
There are some changes coming to Shopify Plus in regards to how sales tax is done.
So Avalara and Shopify have a very long-standing commercial agreement where for years the only solution outside of manually uploading tax tables to your Shopify store was upgrading to Shopify Plus and using Avalara. The landscape has changed. Shopify built their own tax solution called Shopify Tax. And then in 2023, Shopify opened up their partner portal. Now there are multiple options at any level of Shopify. You no longer have to be on Plus to use a third-party integration to calculate tax. So because of how Shopify, operates as a platform, allowing third-party vendors to build approved integrations, there was just a mutual decision that the legacy integration doesn't need to be supported anymore. So we gave a 6-month notice of deprecation, and of anyone who uses the integration between Shopify and Avalara on the Plus integration, that will be deprecated and shut off April 30th, 2020.
For me, what's missing is the strategic, how do we not just grow, but how do we grow profitably? And I think that's hard to do without a 12-month forecast.
You see these companies using cash flow because they have to, but because they're not plugging it into a budget and working against that, the profitability struggles with the growth.
You don't even know if you're profitable sometimes. We have a lot of customers come to us just asking, like, I don't know if I'm profitable. Because on a cash basis, it's really messy. And accrual accounting is hard, especially for e-commerce. But without that historical information, it's hard to come up with a budget. And the budget is what we use to determine how we're going to achieve a profitable outcome or a growth outcome.
So just to recap, phase 1, accounting as necessary, primarily so that you can file your taxes. Phase 2, accounting as valuable because it gives you visibility into the performance of your brand. Phase 3, accounting as strategic because it allows you to use that historical information to look ahead into the future. And then phase 4 is accounting that is so rock solid that provides third parties with such visibility that they can make informed decisions to either lend you money, to invest in your business, or to acquire your business. At every single stage, you need to be doing this correctly because it can make or break your business.
I've been a big budgeter for a long time. And there's a quote that I always use. It's from Dwight Eisenhower. In preparing for battle, I've always found that plans are useless, but planning is indispensable. And the reason why I think this makes sense is nothing goes according to plan. But if you've gone through a planning process, you know how to adjust. You're not just reacting. You're like, okay, what if we do this differently? What is it about our assumptions or our approach that were off? And how do we apply those learnings into the next year? How is sales tax calculated?
It boils down to kind of 3 factors: where, who, and what. There's complexity in each of those, of course, but they're kind of gates. Where unlocks who, unlocks what. And what I mean by that is where the sale takes place is the first thing we look at. The ship to, ship from address. So who boils down to not every customer is going to be taxable. Knowing who's exempt and for what reason, and being able to apply those exemptions at checkout.
Now let's talk about the what.
Again, it's defined by the exceptions, right? Most things, if you look behind me on the shelf, almost everything up there is taxable everywhere at the full rate. It's all just physical goods. But glasses, if it's prescription, it's taxed differently than if it's not. You don't need to know all of those laws, though. What you need to do is utilize a service like an Avitax where you just have to know your product.
You need to pump up that ROAS number. You need to be paying attention to the ads and the campaigns and the channels that are lower ROAS, and that will translate into a better marketing efficiency. What I've seen far too much, especially amongst smaller brands, is they are deferring that decision and that responsibility to the marketing agency. And what I would say is you can't afford to do that. You need to understand what's going on with your agencies. You need to understand how they're executing your ad budget, know how to hold them accountable. In some cases, you probably need to be owning your ad campaigns. It's not like this stuff is a mystery. It's complicated, but you can learn it. And so I think brands need to continue improving their marketing efficiency.
So if any of those sounded interesting, there are links for all of them included in the description below. See you next time.